Okay, here we are, another XRP video. We're going to be jumping into XRP, we're going to be taking a look at the price action, what I think is going to be going on, and all that wonderful stuff. As we get into the video, if you find it useful and informative, smash the like button, I do appreciate that. If you're new, subscribe, and if you haven't yet joined us in Discord, what are you waiting for? Check it out, link is in the description below. Let's jump right down into this one. XRP paired up with USDT. This is the BitGet spot exchange, and we're on the 1 hour time frame. So here we can see we've had a move to the upside. Nothing terribly too unusual about that. As you can kind of see, we have three waves going up here. We have three waves coming down here, stunted C wave, and then we've moved on up. Now this move to the upside looks interesting, but still very corrective, and does kind of look like it's done and complete right there, which essentially would put us into an A, B, and C structure like this. And if we go ahead and just measure the distances, we'll just go ahead and make sure that everything is aligned to the rules. We are falling a little bit short. That C wave structure should be a little bit higher, more towards the equilibrium at 50.6 to 51.373 up there. Let's go ahead and actually just mark that up. What I'll do is go ahead and see if I can actually get this on the nose, which I can't, but I'll just eyeball it a little bit. We'll come into here. We'll go ahead and change our styling into yellow and our background into yellow with a little bit of occupancy. Yeah, there we go. Okay, cool. So this is the range that we're kind of looking for. Yeah, I didn't think it should be white. It should be white. I need consistency in my life, people. There we go. Okay, so that's kind of the range, right? So which means although it looks like we're complete here, clearly we haven't met the expectations, okay? And therefore, we've got to continue this move to the upside. Now, we can see here we've started a climb. We tried to get a daily close above the 200 EMA, but we've been pulled down today so far. The stochastic RSI is in an okay position, so it's possible that maybe we can rally on up there. But minimum expectations have already been met, okay? We've already met those minimum expectations, and as such, we want to be a little bit cautious. I would say that if we come down lower than 47.439, it kind of means that we're done with the highs on that range and we can kind of move on from there. Okay, but for now, it still technically is possible. The structure would have to fall in line slightly differently. Let me go ahead and just remove those. It would have to look more like this as an A, B, and then C coming up here, probably just tapping into the low side of this range and getting rejected from equilibrium. Okay, that would be the Elliott wave theory ideas around this structure. But just bear in mind, anything lower than 47.439 would rule that out as a possibility. This is not a trading opportunity. I would not want to go long here because the stop loss would have to be down below that range. And of course, I only think it's going to be tapping into that high there, which means your risk reward ratio is 0.87. That means for every $1 you would risk, you would only earn 87 cents. And that is not good for your portfolio. So I wouldn't recommend doing anything like that. Not that I can make any recommendations, of course, because I'm not a financial advisor and I cannot give you financial advice. All I can do is share my thoughts and opinions on what I would personally do, and I wouldn't be trading this move here. Instead, I would be waiting for the short opportunity, which would come at a higher range here. Okay, we'd put the stop loss probably above that swing high of this red area just up here, and we'd go ahead and we'd target to come down. Probably, just target out something like a risk reward ratio of 1.5 to start, and then just do a trailing stop and just follow the price action down deeper if it needed to go. But for now, you'd kind of see a better risk reward ratio by waiting and being patient, picking and choosing the trades to kind of go after. Let's go ahead and remove the wave structures here, but we'll leave the target ranges in, and I'll remove the Fibonacci retracement tool. Let's talk smart money. Okay, so smart money shows us with unfortunately two fair value gaps at the moment, and I say unfortunately because at some point the price action is going to have to come back down and fill these out, which is not something that we want to kind of think about, but it's there and we should probably acknowledge it. So down on the low side we have this at 46.597 to 46.871. okay, that's the low side, and then up here on the slightly higher side we have 48.758 and 48.942. okay, and these are, as I always say, if we come over to BitGet, we go over to our spot trading for XRP. Is it on here? I can't see it. Yes, there it is. We have the spot trading for XRP on BitGet, which is obviously the same data source that we're using here. As you can kind of see, XRP USDT spot 1 hour BitGet. So if we come over to the BitGet spot trading on the 1 hour chart, which you can see here, you can see our expectations were to first move down into the fair value gaps before moving up to grab this fair value gap up here. You can see that we're actually moving up and filling the gap before moving down. This isn't terribly too unusual, but it was a little bit against my original kind of thinking. But it is what it is, and we can kind of see that here because this trading view will save all the analysis in. So you can see here we've kind of been pushing and then we're breaking up, but we have yet to actually break above this fair value gap at the moment. And of course you can kind of see the two existing fair value gaps. This one at the bottom here has already been filled, so I will remove it, and we've left another little one just here. So we can still see that we have a need to move on down, but there's also a need to move on up a little bit higher here. And there's also a fair value gap up here as well, which I'll go ahead and draw in using the rectangle tool. Which I'll go ahead and just put this in here. So you can see there's also this fair value gap here at 53.843 to 56.181. Okay, and these are created from imbalances in the order books, which is why I've come over to 𝗕𝗘𝗪𝗕. Okay, so if there's a large amount of sell orders, okay, that's not met by buy orders, then price has to move from the high side to the low side to fill them. It has to find buyers, right? So there's always a buyer, there's always a seller. And in a market that is highly liquid, you just get this ranging market. And when there's illiquidity or pockets of where price has no liquidity, you get the gaps that get left behind. Price wants to go back and fill those gaps. It wants to put liquidity where liquidity was not. So analyzing the order books will help you see these things slightly ahead of time, but that's not really even the advantage. The advantage comes from when these gaps are left behind, and you can see that the price will naturally want to kind of go back and fill those. Obviously, you've got to look for market structure as well. When you have market structure and you have fair value gaps or CME gaps and things like that, you start to actually end up thinking and looking for supply demand metrics that actually suit the trading patterns that are there. Ultimately, you avoid looking at things like trend lines, and you start to avoid looking at things like cup and handles and head and shoulders. These things are not really good for market structure, whereas smart money concepts, Elliott wave theory, these things are really good at market structure. They show you the market structure. Couple that with supply and demand planning, and then you start to actually see how these fair value gaps are created and how price wants to naturally be pushed up towards those and put liquidity in those pockets. You can also do liquidity hunting as well, and these are great tools in your arsenal when it comes to trading. So when you can kind of come over to 𝗕𝗘𝗪𝗕 here, onto the XRP USDT pair, and you analyze all this stuff, you can actually then start to think, okay, well, we have a probability of a move here and we can trade it accordingly. Now, this is a spot pair, which basically tells us, okay, well, we want to be buying, which we know price is going to come down into these low ranges at some point. That's going to be where you want to put your buy orders. And if you're looking at these higher ranges here, price is going to want to come up into these high ranges, and chances are that they're going to be hit with resistance and sell orders within these ranges. That allows you to kind of trade accordingly, whether that is using leverage and futures markets, or whether that is using the spot market. Okay, so understanding these tools I think is critically important for retail investors. Now, if you're just looking at buying and holding and accumulating XRP, then why not check out 𝗕𝗘𝗪𝗕? Affiliate link is in the description down below. KYC is optional here, but it really does depend on whether or not you're going to be onboarding fiat onto the platform. If you're going to onboard fiat, then you're going to need to do KYC. If you're just going to move stable coins over, then actually there's no KYC required. You can just deposit your stable coins and trade as such, right? So that's kind of how I tend to do it. I basically use things like Coinbase to onboard fiat. I then convert into stable coins, and then I move the stable coins. And then I can have, trading platforms that are KYC free, such as 𝗕𝗘𝗪𝗕 here. Now, those rules and those regulations may change from time to time and depending on your jurisdiction, so do your own research and all that kind of stuff. But if you are looking for a platform that sells XRP on spot, then why not check it out? 𝗕𝗘𝗪𝗕 affiliate link is in the description below. Let's jump back down into the charts. Okay, so we can see here, obviously, our gap that needs to be filled. We've got the fair value gaps also down here as well, and therefore we want to kind of acknowledge that yes, there's going to be some price movements here that are going to have to occur. Now, it's possible that we actually have something like this occur where we move down like so, and then we break on up, and we that's a bad one. Let's draw that properly, right? And then we break up and we basically tap into this slightly higher range of close to equilibrium, but getting rejected from here, and then move down into that low range over this side. Okay, and this is because momentum is shifting for us. We saw this with the ranging market. When the market starts ranging sideways, it allows for the momentum to start shifting quicker. Okay, people are trying to decide, do you go long, do you go short? And as such, you find that whilst that is a highly liquid market, with equal buyers and equal sellers, the market just goes sideways. Your big movements are yet to actually break up or break down. And as such, your volatility indicator or your momentum indicator, like the stochastic RSI and the RSI, moves from oversold to overbought to oversold to overbought very rapidly, because again, the market can't decide which way to go. And once the market makes a decision, then you're going to start seeing momentum shift in that particular direction. Okay, so that's really where this oscillator starts coming into play. So as we can kind of see, we were in a ranging market. We broke up. We've kind of had a nice healthy correction to the downside, resting on the 50 EMA, trying to get above the 200, but really struggling. And you can see that on our hourly chart, we're about midway up on that oscillator. It can go either way here. So the market's incredibly fragile. So just be very aware of that. Now on the 4-hour time frame, we can see the momentum is shifting down. So it might be that actually we start going down into the oversold area, taking out that first fair value gap. Like I said, expectations might be that we come down in a 3-wave drop like so, and that could actually support the idea that our momentum is shifting to the downside on our 4-hour chart and could take us back down on our oscillator to the oversold area on our hourly. That would then line up everything for a bigger move to the upside to come up towards equilibrium and into that C wave positioning at around 50 cent. Okay, so ultimately I think that's where the highest probability moves are likely to be for XRP. A move down and then a move upwards. That's kind of where my mind is at over the next kind of couple of days. But I'll leave it for you guys to kind of decide what you think. Do you think we're going to be breaking down just a fraction further before we actually start tapping into that 50 cent range? Or do you think it's just 50 cent from here? Let me know in the comments down below. I'm going to leave the video there. If you found it useful, smash the like button. If you're new, subscribe. If you haven't joined us in Discord, check it out. Link in the description below. And if you're looking for a new exchange, why not check out BitGet? Affiliate link is in the description. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.